Welcome in, guys. Mr. Moneyman here. So there was some big news on January 6th, and that was that the Senate had turned blue, which basically means that now the Senate has a Democratic majority. Now, before I get any further into this video, I just want to make sure that you guys understand that none of my political views are going to be coming out in this video, and it's all going to be purely based off of analysis of the facts and what the facts are telling us is going to happen to the stock market. And of course, we can't forget this. Make sure you smash that like button below and subscribe to the channel so that you stay up to date with all of my future news and content. Without further ado, let's get going. Alright, so let's take a look at exactly what happened before we determine how this affects the stock market. On Wednesday, January 6th, both of the Democratic candidates in the Georgia senator election swept and defeated their Republican counterparts. Because of this, Democrats won majority control in the US Senate for the foreseeable future. Now, the Democrats only have 50 seats in the Senate opposed to the 50 seats that the Republicans have. So technically, it's a tie. But due to the fact that Vice President-elect Kamala Harris will have the tie-breaking vote when a new bill comes up, Joe Biden will have a very easy path to get any of his new legislation through Congress. And the biggest thing that I think Joe Biden will be able to pass because of this is his extensive $4 trillion tax plan. So let's go ahead and take a quick look at what this tax plan is going to do. Specifically, what it's going to do to the capital gains tax. So in this plan, Biden has proposed increasing the top tax rate for capital gains for the highest earners to 39.6% from 23.8%, the largest real increase for capital gains rates in history. Now you might think, oh, this only impacts the highest earners. Why should I care about this? Well, if you have any money sitting in the stock market, then you definitely should care. The highest earners in the United States also usually have the highest amount of money invested in the stock market. Now we're going to go ahead and see why that's important in just a second. Now to understand this, we have to look all the way back to 1986, when the Reagan administration increased the capital gains tax from 20% to 28% in the Reagan tax plan. When they did this, capital gains realizations went up by 60%, meaning that people were rushing to sell their shares and lock in their gains at the lower tax rate before they became subject to the higher tax rate. Everyone wanted to start taking advantage of this temporary tax rate before it went away. Now, when all of the people that have the most money in the world and the institutions and hedge funds and moneymakers, they start doing this all at once, the stock market tends to have a short-term downfall. Because as you know, when people sell stocks, then stocks tend to go down. And if a massive amount of people start selling stocks all at once, then this could cause a short-term disruption. Now, just like anything else in the stock market, this is also not guaranteed. It's just an assumption based off of the logic that now that we have Democratic control in the Senate, Joe Biden will be able to pass his bill with ease. And also, I said this multiple times, this is going to be a short-term disruption. I think if you're invested for the long term, you don't need to worry about this too much. But on the other hand, we have just gone through one of the biggest bull runs in the history of the stock market, and the market is at all-time highs right now. If you have a lot of profit sitting in your account, don't be afraid to take some off the table to hedge against this, because in the end, profit is profit, and you shouldn't be afraid to take some just so that you don't miss out on the next bull run. Now, by no means am I saying that you should panic sell everything you have and hide your money under a mattress or something like that. What I'm trying to say is that you need to take a look at your own portfolio and your own personal situation and see if there's something that you might want to do in order to curb the potential short-term volatility that may be coming up in the near future. Now that's all I got for you today, short, sweet, and to the point. Now don't forget to smash that like button below and please subscribe to the channel so you don't miss out on any future content. Until next time.